Let's get into the currency markets now with Nick Twidale from FP Markets. So just trying to see what the Aussie dollar is doing in response to that. But I mean, the Aussie's been holding pretty much at this 10-month low anyway due to the greenback strength. What are you seeing?
It has, yeah. I just checked briefly while we were off camera and it's just ticked a few points lower. So it's not been a huge reaction, but I suppose it's another number that takes a little bit more pressure off the RBA. From any further hikes in the near future. So I think that helps with the narrative that we're probably going to see the Aussie drop a little bit further, and that greenback strength is still, I think, fairly relevant, especially after last night's data out of the US. It does put a little bit more pressure, maybe not to raise rates, certainly not this month, but to keep them higher for longer, and I think that's why we've seen the dollar appreciate and US yields as well.
Yeah, that sticky inflation data, we were talking about that earlier, about whether or not you do see the Fed hold for longer and we won't potentially be seeing cuts in the space. Does the Aussie dollar get significantly weaker? Do we test 60?
I think we can do, and I think one of my key factors is obviously the dollar side of the equation, but the other is China. And news coming out of China is not fantastic at the moment. We're seeing we get spikes in the Aussie when there is a bit of stimulus, and there's this very strong correlation in short-term trading between the Chinese yuan and the Aussie. But every spike we've seen, certainly over the last month or so, has been sold into fairly aggressively, and I think a lot of the bigger players are waiting for the Aussie to go lower. You know, some of the exporters, etc., are waiting for lower Aussie at the moment. So it's an interesting dilemma that we've got trading the Aussie, because it is grinding lower, and there doesn't seem to be much of a great reason to be buying at the moment.
No. When it comes to the China picture, I mean, obviously we're looking at the impact of the property sector there. What have you been noticing, though, with the fix?
The fix is definitely a major consideration. So even just before I came out, I spoke to a few traders at the bank, and they're just like, keep an eye on the fix. So that fix is having short-term impact. It is short-term. Everyone's watching it. It's one of those things. The Aussie in particular goes through these phases where it's got a strong correlation with one thing or another. It always is fairly strongly correlated with the yuan, but at the moment, specifically because we're seeing intervention from the PBOC, it's a big factor. So if we do see another fix that knocks the Chinese yuan higher, we'll see Aussie react as well. But really, it's just giving us the fundamentals are the fundamentals, and it's just giving us better levels to sell into for the Aussie.
Okay, so another commodity currency, the loonie. We did see the Bank of Canada keep their policy rate unchanged. What's the outlook there for the CAD?
Well, I think we're sort of seeing central banks singing from a very familiar hymn sheet at the moment. The Fed, the RBA to a certain extent, and the Bank of Canada, they're all battling against strong inflation, and they're looking for numbers to come in a little bit weaker. The loonie in particular is like that dollar CAD chart. We are sitting sort of just under, that's quite long-term resistance levels. And I think the next few months are going to be interesting longer-term trading for currencies like the Aussie, like the CAD, and especially against the dollar, where we start to see a changing rhetoric and moves from central banks. So if we do see one central bank pulling back and looking at cuts, and I'm not saying they're going to come soon, but the market starts pricing them in sooner along the curve, then that could start to see these moves in currencies. And I think Aussie could be one, as we're seeing data is coming off. And CAD's another one. GDP was sort of like still lagging for them. So they were happy. The Bank of Canada, I think, is quite happy with where they're at. But really, all of these central banks need to see inflation start to come down at a bit of a quicker pace.
Yeah, or even sticky inflation here too. The dollar soaring, though, as we've been mentioning, against all the currencies. The yen sinking a little bit on these yield differentials. What are you seeing in terms of where the yen moves?
I think the trend is your friend with the yen, and it normally is. And interest rate differentials, we are seeing, and as I said, US data again backs up that move higher. I think, as you can see, it probably will be a grind higher. We've got jawboning from the Japanese authorities, which we do get when there are moves. So I think similar to what we're kind of seeing with the yuan and the Aussie, you're going to see with the yen again. You may see intervention from the BOJ as well, and that can be quite hard and quite sharp. But generally, intervention doesn't work over the short term. We've seen it I'm far too long in the tooth. I've seen some horrible moves, but within a couple of days, it will come back to the natural level of where the market wants it. So I think we're going to see grinding higher for dollar yen over the short term.
Okay, we're looking too in terms of what you've been looking at in the Eurozone. I was just talking there to Adam Grotzinger from Neuberger Berman. I mean, it's something that we hear all the time here on Ausbiz, that this is the place where there is significant weakness in the Eurozone. Where does the Euro trade from here?
Well, I think the euro is another interesting point. You look back at Jackson Hole, which we were sort of focusing on for an entire week ahead of that, and you got a slightly different story from Christine Lagarde. But I think we are looking at further weakness in the euro, and that just compounds the move we've seen in the euro against the dollar. So there's a lot of these currencies that they're very hard to trade on the break of say the downside support for euro, because we're seeing them, but they are grinding lower. So it's like a sell the rallies story, I think, for the euro. China's a big effect on like China, the lack of growth coming from China and the demand that it then gives to Europe is a big story there as well. So I think for the short term, like it's another, the trend is your friend story. I can't really get too contrarian on the moves that we've seen recently. So I think it's a sell rallies in the euro as well.